I sold 18 of them for 100 a piece, right? 15, 18, something like that. So I come to realize that if I know now what I didn't know then, I would have just borrowed against it, right? And not I wouldn't have borrowed Ethereum against myself either. I would have borrowed 15, 18, something like that. I would have borrowed USDT, something that wouldn't have changed, something that wouldn't have gone up, and I'd have been able to pay that back with my mining rewards, and I still would have had the 18 Ethereum that I used for collateral. This is the importance that I'm trying to teach prior to this bull run we're about to go on. I know y'all heard about the upcoming bull run that happens right after the halving, and y'all might have think that, okay, we already been through the bull run and now it's over. That isn't true. The bull run has yet to start. You've seen bullish momentum in the market. You have not seen a bull run. Once we go on a bull run, almost all assets will add a zero. Some will add two. That's when you kind of get in the vibe and the feel of a bull run. We've been in bullish market. We have not been in the bull run yet. So when we undergo this bull run, I want y'all to understand the possibility that you have. Another bad story would be my BNB. I was buying BNB when it was changed, when it was less than $1. Then it made it to 12, and I was still buying BNB between 12 and $14. When BNB one day it shocked me and it just ran up to $100. It basically added a zero to my investment. I cashed out. I took my profit. I ain't know no other way at that time. Next thing I know, BNB wouldn't stop. It never pulled back. I'm thinking I'm gonna cash out a little bit. I'm gonna buy back in on the pullback. It never pulled back. It just kept going, all the way to $500. And I sold at 100. Right? I missed another 5x on top of my zero that it was added. But if I do what I know now, I would have only borrowed against my BNB instead of taking profit, instead of selling it all off. And that's why I'm trying to teach this. While we're undergoing a bull run, y'all got to imagine Ethereum right now is $2,500. Do you really want to go on record by 2026 and say that you were selling Ethereum when it was just $2,500? Or you want to go on record as I was buying Ethereum and I never let it go? I made a post today that said I'm never selling. Like I'm not selling my crypto. Why? Because it's collateral. I can just borrow against it. I don't need to sell it. Well, the strategies that we're going to learn here is strategies that the rich have been practicing for years. And we, well, at least I ain't gonna say we gotta know y'all situation, but growing up in a middle class family, we didn't have access to that, right? My father didn't own a Picasso. My father didn't own assets. We had a house, we had cars, but he didn't have any real assets that he could actually borrow against. And that's the difference that we have now. You know, I don't need a Picasso, right? I could borrow against my crypto. I don't need expensive art. I don't need a second house. I don't need to take a loan against my mortgage. I don't need to take a payday loan. I don't need to borrow money from nobody else but myself. And the great part about borrowing from yourself is you only owe yourself, right? So some people think, well, Dennis, how long can I hold my loan? As long as you have enough collateral to support it. There's no reason to rush paying back your loan in crypto. As a matter of fact, I'm gonna teach you a way where you can get your loan down without actually having to pay it. So that's the benefit that crypto gives even more than traditional is now we can even manipulate our debt. Before, when you took a loan out against a painting, you couldn't change your debt. You couldn't get your debt to go down. You had to pay it, including the interest. Well, now we can actually maneuver the market to benefit us. I'm gonna teach you how to load InstAdapt, and I'm gonna teach you all the strategies that InstAdapt has so that you understand how you can use this. But don't think that by the end of this class, you're gonna get it all and know everything. It's gonna take some time. It's gonna take this whole program before you really understand all that I'm explaining. And even after that, I'm probably gonna check on you a couple of times to make sure that you picked up what I was putting down, because this isn't something that you get overnight. This is all of us have the same similar situation where we used it long enough that one day a light bulb clicked and we're like, I can even do this. Right? So you're gonna start using this process, and some of it still ain't gonna make sense until later on. All right, let's go ahead and get into it. Well, before we get, I start going into the strategies. I want to pause for a second. I'm seeing who all in this room. Majority of y'all understand crypto and how to move money around, but I still want to just make sure that anyone need me to show an example of how to load a MetaMask wallet. You know what? Don't worry about it. I'm gonna do it anyway. It's part of the class. So the first way to get started with Instadap is you will use a MetaMask wallet. Now they got a couple of options. You can use the Avocado wallet as well, but I'm familiar with MetaMask, and that's why I'll be teaching from today. When you come to open your MetaMask, I want y'all got homework to do. Y'all got a decision to make on which account you want to create first. I hope you create multiple, right? Each different account, each different network is a different account. The money that you have on Polygon will not show up on your Avalanche. The money that you have on Arbitrum will not show up on your Base, right? These are separate networks. They're like completely different bank accounts. So for you to use them, you had to load each and every one of them. Let me describe them for you so you know which ones you would like to use. First, we have our good old faithful, the one that started it all, Ethereum. Ethereum is great, but the problem that we have using Ethereum on Instadap is the high gas fees. Now, I don't just mean the regular temporary high gas fees. Y'all think y'all see $20 and $30. I mean, when we're dealing with smart contracts, and that's what we're dealing with here, you're coming up with $100, $300 gas fees. This is just so you can swap your debt or to swap your collateral. That's a lot of money to spend just to be able to maneuver. So I do not suggest creating an Ethereum account. This is why Ethereum created layer 2s for cheaper gas, right? So when we think about creating a Polygon account, this is a lot cheaper. The transactions here, even if I'm swapping using the contract, is 3 to 10 cents, 10 cents on high volatility. That sounds great, right? The problem that we have with Polygon is the congestion. There's sometimes where there's so much flow coming in and out of the market that Polygon will just get stuck, and it won't even allow you to move your money or to touch your money. It's gonna keep giving you error upon error upon error when you try to mess with it. It happened to me a couple of days ago, but of late I've been able to catch Polygon every now and then, and it'll actually work. As long as the market isn't moving fast, Polygon normally works and it's always cheap. But those times that you can't use it, that could be detrimental. Like the other day when the market dropped by 20%. Polygon, you wouldn't have been able to use Polygon. Hopefully you made your move before that happened, but you wouldn't have been able to touch anything in that Polygon account while it was happening. And that's why I suggest using a small amount if you are going to create that Polygon account. Next, we have Base. Base is a layer 2. It's giving you all the options that Ethereum is giving you, but cheaper. Dang, the market is falling again. Man, summertime is so choppy, y'all. I pray y'all just stick to spot trading like I'm doing, because that leverage trading is gonna get us, man. Hold on. Anywho, Base is like Ethereum, but it uses Ethereum for gas. So if you're gonna load up a Base account, be sure to send Ethereum to your MetaMask. Each of these accounts, when you load them up, you want to use the gas that they need. Ethereum, of course, uses ETH. Polygon uses Matic. Base, Arbitrum, and OP all use Ethereum. Avalanche uses AVAX. Phantom isn't here anymore. I don't even know why it's still showing up. So the problem I have with Base is they don't have many assets. You have 3 different Ethereum variants, but you don't have Aave or Link or anything like that. So I use Base, but not much. It's just where I'm holding a lot of my ETH. If you're a big ETH head like me, Base is pretty cool. But when it comes to trading those smart contracts, like swapping collateral and swapping debt, it gets expensive. Those could be the more 30 to 50 cent transactions. When you're just trading, it's only 3 to 5 cents. Same thing with Arbitrum. Arbitrum has cheap gas fees. Even when you're dealing with smart contracts, Arbitrum is around $5 to $10, a little higher than Avalanche, but it's not that bad. And Arbitrum works, guys. It works. Right now, my Avalanche account is down again. This is the second time in history that I've had to deal with this. The first time was a while back. The currency USDC got depegged for a moment. It wasn't pegged to $1. They had a problem with the bank that they was using, and it got scary. And the money was leaving so fast here that Instadap, Avalanche locked the account so we couldn't move money out. They did this so that eventually the money would return. Same thing they're doing to the stock markets now. When market opened on Monday, there was about 5 major companies that was closed because they didn't want people to be able to sell off. They wanted y'all to have to hold your stocks until they was able to fix what was happening in the back office. Well, that's what happened here with your portfolio. So I'm bringing that up so y'all understand the risk that you're taking. I don't want you to think that, oh man, this is so safe. It's just like my bank. I ain't never gonna have no problems. That's not true. We are in the Wild Wild West, and we are pioneers in this space. So we are going to come up with little glitches and glances here and there, but again, we're pioneers. I'm the first of many. Once these glitches fix, I'm gonna understand this even better than all the rest of the people out there. So I'm not running. Even with this hiccup I have right now with Avalanche, I've heard people say that I think I'm gonna close my Avalanche account once I'm able to. I'm not. This is a glitch that it has to go through. Every currency in crypto went through something. Y'all don't understand how much I went through with Ethereum before Ethereum did what it did, right? Ethereum kept lying to us back in 2018. Oh, we're gonna do this. Oh, we're gonna have a bomb. Oh, we're gonna have. They kept lying, and it was doing bad for them because it was looking ugly for them. But look at where they are today. So I don't think just because these technologies are having hiccups right now, it's gonna be a long-term problem. So now I'm gonna still be investing. I'm gonna still hold them down. So when we go to Avalanche, Avalanche is one of my favorite ones out of all these options. It has multiple options. It has about 7 different currencies that you can choose from, and the fees is very cheap. You are paying no more than $3 to move money around. And outside of this catastrophe we just had in the market, Avalanche works even when we have volatility in the market. Like I said before, Polygon could lock up on you, but Avalanche this is the second time I've dealt with this. Other than that, Avalanche has always worked for me. It might have a hiccup for a moment that you can't use it. What doesn't? But then you'll come right back later and you can still use your wallet and an Avalanche account. So I highly encourage you don't over leverage when I start teaching you about leverage, because if you can't touch your money, you don't want to get liquidated just because you couldn't stop the bleeding. When it dropped the other day, I didn't get liquidated, even though I didn't stop the bleeding. I didn't get liquidated because I had a decent health factor. I don't use OP much, but that's another option. I'm not familiar with the gas fees. I know it's with Ethereum, and I know I wasn't attracted to them, and I know they didn't have that many options to choose from. So I just decided not to continue holding the OP account. I used to hold it just to hold my Optimism coins, but I stopped trading those and I stopped holding those too. So now I'm just really out of the Optimism game. I'm not optimistic about Optimism. All right. So those are all of your networks, and you want to decide which one you want to load up. Once you realize that, you had to use the proper gas. Like I said before, Base, Arbitrum, and OP all would need you to load Ethereum into your MetaMask so that you can trade. And that should be the first asset you load. We can trade it once it get here. So if you want to load up an Avalanche account, what I want you to do is send the amount of Avalanche. Say, hey, Dennis, I want to create a $1,000 account real quick. Well, send you $1,030. You're gonna need some gas fee if you want the whole thousand to go in, right? Send $1,030 of AVAX to your wallet. And this one, I'm gonna do it with Ethereum because I'm on Arbitrum right now. But it's the same thing. You want to use whatever gas you're supposed to use. So if I wanted to load an Arbitrum account, I would send $1,030 worth of ETH to my Arbitrum account. Once it's here, I come to balance and I select deposit. When you click deposit, it will find whatever money you have in your wallet. I did not know I had money in this bag of wallet, but it will find whatever money that you have in your wallet, and you could deposit that. So it will see the whole $1,050 or $1,030. Be sure to only deposit 1,000. You have to leave 30 for gas. No matter which network you on, $30 worth of gas is a decent level to be safe with, to hold. You know that you can trade in and out as you need. So you have to leave some gas in that currency. Now, once you deposit the rest of your Ethereum, it will show up here, giving you the opportunity to trade it, right? So once it's Aave here, but if your Ethereum hit, you can, at this point, trade it into the multiple coins that you want to trade into. Let's say you want to bust it all the way down 3 ways. I just want like a little bit of this and a little bit of that, Dennis. All right, I got you. Hold on. That's the whole one? No, that's it. All right, so I put a little bit of Bitcoin in it, right? I swap to a little bit of Ethereum. I want me a little bit of everything. Let me do one more stroke. I want to show y'all how we'll be able to load up these things multiple at a time. So did I get any ETH yet? Let me grab me some ETH real quick. My computer locked up. All right, second. But anywho, I'm gonna buy a couple of assets and I'm gonna be able to just deposit them all at the same time. Yeah. Also, whenever you want to practice, you can do like I'm doing right now and use a simulation mode. You can even use simulation mode on top of your account, right? If you already have your account put up and you click simulation, you could make moves on your account without actually making any changes. All right, we're gonna do one more buy, and then I'm gonna add them all at one time. I'm gonna get a little, nah, you know what, this is good enough. So now we've put money into our MetaMask wallet. When we went from there and we deposit that money into our DSA account. This is a DSA account. This account and your MetaMask wallet are two separate wallets. The money in your DSA account, you know how we always say, not your keys, not your cheese? Well, the money in the DSA account, you don't have keys to Instadapp. You have keys to MetaMask. When you supply Instadapp, you basically said, hey, I'm gonna let y'all hold on to my money as long as you pay me interest. It's not yours once you load it and supply it here. It's Instadapp. Instadapp gives you interest, but you can always withdraw it and take it out as you please. Once you withdraw it and put it into your wallet, that's when it's yours again. I had issues with sim mode and Instadapp. Can I get a walkthrough again? Absolutely. Well, I've already got to set it up, so I'm gonna talk to you probably tomorrow and walk you with how to set up your simulation. All right. But now that we got it set up, we got multiple assets here. Let's go over our first strategy. First strategy is batch operation. This allows you to do multiple tasks on one single gas fee. Excuse me, with one single gas fee. So in this scenario, I want to supply two different coins, my ETH and my Bitcoin. I can come here to multiple supply, add the tokens I want to use, confirm. I can say I want to use the maximum amount on both, and I supply it. And now that money will come here. You see this pop up a little bit in just a second. And we just supplied our Ethereum account. You have to supply before you can borrow. And you want to do, well, I can't borrow the money. You got to supply the money. Now, after you supply the money, there's only so much you can borrow to keep you healthy. We're going to talk about that, but let me finish our batch operations. So I just did a multiple supply. I can also do a multi-withdrawal. I don't have any debt right now, so I can withdraw any amount I want to. Let's say I just wanted to pull out a little bit of my USDC, a little ETH, and a couple of items. You just want to pull out a little bit of 3 different ones, but I only want to be charged one time to do it. You can do that here. I don't want to do max this time. I'm actually type in some numbers, right? 10. We'll just do the 0.05 here. Oh. And now this will allow me to withdraw multiple assets all at the same time. And this is withdrawing from the supply. So once I withdraw this, the money will be found in your balance, right? There you go, that ETH, the link, the USDC. At this point, if I wanted to spend this money or take this money out of this account and use it, I would have to withdraw again. When I withdraw this to my MetaMask account, from there, I can do with it as I please, right? I can trade it. I can send it to crypto.com and sell it. I could use it on Bitrefill. I can use it on Spritz, all these places where we spend crypto at. And I'm going to go over that in our next class, but you will withdraw it and use it as you need. Now you have a multi-borrow as well and a multi-payback when you do. So if I had all these assets and I want to borrow from them, but I don't want to borrow just from USDC. I kind of want to borrow a little bit from ETH. I want to borrow a little bit from Bitcoin. I want to borrow a little bit from Link. Why do I want to borrow from these 3? I'm bearish on the market. So I want to borrow them because I think the value is going to go down. And while the value goes down, my debt goes down with it. Makes sense, right? So if I wanted to short the market and I'm fully invested like I am now, I have no debt at this moment, but I want to create debt. And I want to create that debt on multiple assets. I want to take out a trade on ETH, Bitcoin, and Link all at the same time. We will go to a multi-borrow. ETH and Link. And I guess I thought I had Bitcoin on there. Didn't I let me borrow from my Bitcoin? That's crazy. Hold on. There you go. And Bitcoin. Right. And bang. Now we was able to borrow from all three of those using just one transaction. So we only pay gas once. This is very handy when you try to save down on those gas fees, right? But I took a multi-borrow. So now I have those assets that I just borrowed here as well. You see, I took a little bit of Bitcoin, I added to my ETH, and we added some more Link over here. So I could, again, withdraw this, take it out, do as I feel. Final one is the multi-payback. All right, so I took out the loan. Now, when I want to pay it back, I have to have that asset. So if I sent back like USDC, I would have to trade it into each individual asset that I want to pay back. Since I still got those assets in my wallet, let's just hit payback, add your tokens. I want to pay it at all, max all, we pay it back. But again, if you sent like USDC here or AVAX here or Arbitrum, you need to trade it into the asset that you want to pay back. And then you can use multi-payback like I just did and pay down those loans, right? All right, bet. That completes batch operations, right? And we also, I mean, it's self-explanatory, multi-collateral. You know what? I'll still do it real quick. I don't even, because I don't use this one. And it is disabled on mine. I haven't seen this before. I think it's on Arbitrum. Yeah, it's disabled. So I haven't used multi-collateral before. But anywho, leverage. Now, this is the great thing about using a network like this. Right now, you're fully invested into the market. We're going to forget that this USDC is right here right now. We're just going to say that all your money is in ETH, Bitcoin, and Link. The market just dipped. And you tap in your pockets thinking to yourself, man, I wish I had some money to buy this dip. This dip is so attractive. I need to buy this dip. Man, I wish I had some money. You do. You're at $88,000. Yeah, it is, but that's already being used. Leverage it. This is what I meant by that Picasso, right? So I want you to leverage. This is going to create debt, but at the same time, it's going to give you more collateral, right? Now, pay attention to the amount of Ethereum that I have. I want to change this to USDT. You can leave it on DAI if you like, whichever one you want to hold debt. When I look for what I want to hold my debt or collateral, I pay attention to the percentages, right? Right now, USDC is charging me $5.58 to borrow. Now that's annual, so that's no reason. USDT is charging more. It's charging $6.16. How much is that? DAI is charging $5.70. So yeah, I think I'm gonna go ahead and use DAI. Now, those numbers isn't of big importance. I don't want you guys to get scared. I don't care if you can see 20 here. That's 20% APY. And it's really just that day because these numbers will change, guys. These numbers will change a lot. But don't get too frustrated with how much you got to pay to borrow. This is way cheaper than any bank. This is for the whole year. You're going to be able to pay it back. Don't worry. So I want to buy another Ethereum, right? Like, dang, the market just dipped. I'm broke, but I want to buy ETH. I can come over here and I can leverage my account. But what is that going to do, Dennis, when you leverage it? This is going to create both collateral and debt. $2,500 worth. It's going to be equal. Watch what happens when I push this button. Let's leverage it. Y'all remember, I only have one Ethereum right now. I only have one Ethereum, and I don't have any debt. 3, 2, 1. There you go. See that? I just bought another ETH. I ain't go to work. I ain't earn no extra money. I used what I already had to add to what I got. Beautiful, right? So I got some debt now. Now I got a health factor. And this is what I was saying earlier. You want to keep your health factor for a good, healthy trading account, 30%, y'all. Just like how you do your credit, they say stay under 30%. For that mediocre risk level, you're at about a 50%. And I suggest you don't go any higher than that. But there are crazy renegades that like to borrow up to 70% just because they can. Those people are out of the market now after last week, right? That 20% dip, they got liquidated. They out of there. Because I only use 50%, I didn't get liquidated. My account's safe. And then I'm gonna just add more money to it. Right? I got a trading account. I make money every day. I'm gonna add to my account, but I'm not selling. I'm just buying more to protect my position. Right? Okay, we'll get to that in a second. But when we leverage positions, that's how we're able to take advantage of buying. Now, what if I was bearish on the market though? What if instead of being bullish like I am buying Ethereum, I thought the market was going to go down? And I want to short the market, but I don't have no debt. Like Dennis, I want to short it, but I ain't got a lot of debt. I only got like I think $2,000, but I wanted like $5,000 to short the market. All right, bet, say less. What I want you to do is go to collateral swap. I mean, not collateral swap. Go back to your leverage. Back to your leverage. This time, I want you to put Ethereum on the bottom in the currency you want to receive at the top. So we want to earn more USDC. But I want to take ETH out as debt. I'm going to leverage my position so that I earn more USDC. And at the same time, now, Ethereum is my debt. My debt isn't DAI at first. See, I'm safe with my debt and DAI. That's not going to move up, down, left, to right. It's going to always stay the same. But once I do what I'm going to do now, I got to watch the market because if Ethereum is bullish, I need to close my debt. I'm doing this because I think Ethereum is going to go down. By doing this, I created debt and added another $2,500 to my account. Let's scroll back up here, see when it happened. See, this is my account right now. I'm going to see me another $2,500 is about to be added to my USDC. Bang. And right here, borrow. Now I owe 25 by 24.56 as Ethereum. If the price of Ethereum goes down by 10%, that'll knock off 10% of this, right? When we look at the chart on ETH, if ETH is where at right now, right there, right, 24.56. Let's say Ethereum goes down to $2,000. This debt is gonna go down to $2,000, but guess what? I don't owe 2,400. I owe 1 ETH. So if the value of 1 ETH is $2,000, I can give you back $2,000 and keep the change, right? This is me taking a sale. Now let's say that ETH went down to $2,000 and I want to go ahead and close my trade out. This is when we want to deleverage, right? Because I want to go ahead and pay it back. I want to lower my leverage down. So this is going to take away from my collateral, but it's also going to take away from my debt. So if I want to get rid of that Ethereum right there, I might need to go ahead and deleverage by 2,500, right? I'm really picking the number of what Ethereum is. You can pick that exact 2,460 if you want to. I'm just going a little bit over. And it's going to give me this 0.02. After it pay off the ETH, I'm going to have a 0.02 in my wallet. Like this money isn't just going to disappear. That's going to show up in my balance. So let's go ahead and pay our debt down, right? And we also see where our health factor is. Right now, we're at 35. We are still safe. But once I pay this loan down, let's see what our health factor looks like. This should go down to about 25. 22. Bet. See, I just paid back my loan. Again, if the market dropped, I would have just paid back 2,000. That other 500, that's mine now. I get to keep that. I was able to short the market by leveraging. This is when you don't have debt. You can create debt by leveraging. Now, if you get into an unhealthy score here, there's no reason for that. That don't make sense. That's only for people that are greedy. If your score get bad, unwind and deleverage. You might feel like you're losing money, but you're not. You're losing the ability to trade a high amount, but your account net worth is the same no matter what. If you deleverage your account, let's say you got $2,000 and you got $500 worth of debt. This means you got a $1,500 net worth. If you deleverage your account and get rid of your debt, You still left with $1,500. Your network won't change. So don't be so like, oh, I don't want to deleverage. I don't want to lose no money. You're not losing no money. Your network ain't changing, but you got to deleverage so you stay safe. Don't get liquidated being greedy. There's no reason for anybody to get liquidated on Instadapp in 2024. We didn't have all these tools back in 2020 when I was getting hit left and right. Now you can always, oh, the market bad. Oh, my health is bad. Let me fix it. It's always ways to fix it. All right, now let's get into the sticky icky. We did this when we first got on. Collateral. Oh, wait, no, this is what we're going to do now. Collateral swap. So I got this USDC right here, and I'm bullish on the market. I think that now is the time to buy some more ETH. I already got a bag, but I've been holding on to this USDC so I could buy the dip. I come on over here. Put USDC at the top. I said I wanted to buy me a little Ethereum. Oh, not a whole ETH. All right. Let's say I just want to add to my bag real quick. I want to use what I already got sitting there. And I can, this is what I really want to teach y'all. Using that collateral to just DCA. Let's say you put $10,000 into this account today. I don't want you to put the whole $10,000 in the ETH today. I want you to put the $10,000 in the account. But every day you can move $100 to ETH. Every day, B. So you can DCA the easy way. You don't have to sit here and look to trade like the rest of us and find the best times to get in, the best times to exit. None of that. If you just DCA, put a little $100 in the ETH today, $100 in the AVAX day, chill, come back tomorrow. $100 in the link, $100 in the IVA, chill, come back tomorrow. You see what I'm saying? You can just slowly get in the market. That way, even if the market continues to go down like it's doing now, you're continuously buying the dip. This market can only go down so far before we take off to the north again. You're going to want to be holding these assets. Time in the market is better than timing the market. And a lot of people are about to learn that when they can't find the bottom that they're looking for right now within these next 2 months. We're all looking for a bottom. Y'all done heard the crazy people say, hey, we're going to see Bitcoin at $10,000 again. Everybody looking for a bottom. And guess what? Those people is actually holding money to the side, waiting to see that money to buy it. I'm telling you guys, load your money up and y'all better start buying this daily, what you can afford, because in a couple of months, you're going to wish you took this advice, or you're going to be happy that you were here. All right. So that's our collateral swap. Whenever we want to swap in the ETH because we're bullish, but if you're bearish, we think the market is about to drop, we want to swap back out of Ethereum. Be sure to have ETH on top and your stable currency on bottom. You can use any stable currency. You might want to choose the one that's paying you the best for supply. This is paying 269. This is paying 325. This is paying 456. We have a winner. Right? So I want to sell my Ethereum into USDT. Since I know the interest isn't much, but it's still a little bit more interest. It just makes sense so I can use that, right? So bang, let's say I want to go ahead and get rid of that 0.5. And this is how we take profit. I had a long speech to talk about why y'all should be spot trading versus trading with leverage. Now, I hope I can get that in towards the end of class, but I want to get through all the strategies first. But this is spot trading, guys. We're not taking a lot of risk here. I can handle the market pulling back 5, 10, 15, 20%, and it doesn't phase me while other people was liquidated, lost everything that they had in their account the other day, right? All right, so now that we got our debt swapped, you know, that's how we just took profit. The market was bullish. We bought Ethereum. Ethereum is at resistance. We swapped it back to stable currency so that we could take profit. It pulls back. I got some stable currency to buy the dip. You notice I didn't sell all of my ETH. I just took profit. I took some money out. But the market's still bullish, and my 2,500 still fits to keep running. But I did take some money out. I got something that I can buy it if it dips again. I got something that I can spend if I want to go out tomorrow because I don't want to sell this ETH. But after I took profit, even though I took, and this is the crazy part, this is what I hope y'all learn to love. Even though I took profit and have it here as USDC, or I have it here as USDT, I can still take out a loan and not touch none of it. Man, I'm telling you, this is crazy, but hey, it's a lovely game once you learn it. I've been talking for more than 30 minutes. I meant to do a 30-minute break. So let me pause for a second. I'm trying not to move too fast. Is there any questions, comments, or concerns about anything that I brought up so far? All right. Cool. All right. So if there's no questions, let's continue down on our strategy list. We just finished doing collateral swap. That's when we're bullish on the market or when we want to take profit. We are deleveraging the account that we borrow from. This helps us pay back and keep the change. Absolutely. You'll be borrowing from this account and you'll be using, when you borrow from here, you're going to want to use an asset that you believe is bearish. Right now, the market is bullish. But if the market was bearish, if I thought Ethereum, which right now is 25, 22, if I thought Ethereum was going to go down, I would want to use Ethereum as debt. And that's what I'm about to bring up right now. I just want to make sure we finish with collateral swap. You use collateral swap when you're swapping into a moving asset and you're trying to grow. Then you're going to use collateral swap to stabilize because you're taking profit, or you feel like the market is about to pull back and you don't want to lose the money that you just earned. You'll stabilize your account. Now, when we talk about debt swaps, we use debt swaps when we're bearish. We use collateral swaps when we're bullish, right? You swap from USDC to ETH when you're bullish. You swap from ETH back to USDC when you think that the market's about to pull back. Well, you want to swap into stable currencies when you're bullish for your debt. And you want to swap into a volatile currency when the market is going to drop, right? What do I mean by that? So my debt is in DAI right now. But if I was bearish on Bitcoin, or if I was bearish on Link, I want to swap my 2,500 DAI into Link, right? Now, I need to find out how many Link is 2,500, right? I don't want to keep playing the guessing game. You can type a number in and see how much it comes out to be. My computer is locked up right now. If you want to, but the smarter thing to do, in my opinion, I go to CoinMarketCap and I find out how much I need to move. So come to CoinMarketCap. I want you to go to products and converter. Now you want to leave one as USD. What I want to see, Link, right? Let's type Link on this one. But because I want the USD value, let's swap these. And I want to know how much is $2,500 worth of Chainlink. They say it's 245.6. I'm gonna just do 246. Let's go back to InstaDApp. Are you serious? I closed my daggone Solana position so I could host this class in Solana with, I closed at 146. We had 147 and moving. Yeah, Solana looking good, y'all. I hope y'all got y'all a bag. All right. Let's get back to it. So we said we wanted to debt swap Link before my computer locked up on me. We have debt and DAI. We want it in Link. This is in this scenario that we are bearish on Link. We think that the value of Link is going to go down, and I got debt already. My debt is stable, but I want to get rid of it. So let's go ahead and put it in that. What was that? 246. So the reason why it's important to get that number is if you go over the amount, this amount is just going to add more to it. Like if I typed in 300, I could take out more if I want to. But look at this health. You see how the health score went up? I don't want to go over. I just wanted to swap my debt. This is going, it will allow you to create more debt if you want. I don't want to create more. I just want to use what I already have, right? The 2,500. Now, if I did do this, what's going to happen is the remaining Link is going to show up in my wallet. So I'm going to do that anyway, just so y'all can see it. Let's go ahead and swap the debt. So this created more debt for me, right? Now I got, instead of my 2,500, I got $3,000 worth of debt. That extra $500, it came over here. Where did I get it at? It would be in Link. No, it's in DAI. Here, that extra 540 that I didn't need right now, is right here. So if you wanted to, you can add this back to your collateral, or you can take it out and spend it. That's on you, whatever you want to do. It can help your collateral score though if you add this back into your account. But when you borrow more than you had, that's where the remaining overflow is going to go, into your balance. Now that we have debt in Link and we're bearish, we're hoping Link goes down 10, 20%, right? Because it's going to take our debt down with it. But what if it don't? What if the market start going against us? What if it's still so bullish and we got a bad position? We need to get out. For you to exit your debt swap, you have to swap it back to something stable or pay your debt, right? You can send Link into this account, not Link, the actual Link. You had to swap the Link to get here, but you can use Link to pay your debt down or pay it off before it goes away, or we swap it back to something stable. Again, you want the exact number. If not, it's going to add more to your wallet, right? Whenever you're doing collateral swaps, you can't add no more. You can type in a number and it's only going to use what you got. But when you're doing debt swaps, it will take more. If you can have more taken, it's going to affect your credit score, your health score. So don't get in the habit of taking more than you actually need. It's not like you cheating the system. They going to charge you for it, right? All right, bet. So let me get rid of this Link. I got to judge it by USD value. Luckily, we had that written right here. So I want to do 320. Wait, 3020. And this number should pop up as 300 Link. It's important that because you owe 300 Link. You don't owe 319, you owe 300 Link. So if I pay 320 right now, I'm going to still be left with owing that much in Link. So I got to add it because obviously the market went up on me, right? So let's see, 30. Come on, man. This is the fast computer. But y'all get where I'm going. You want that number to read the whole 300 Link? Oh, I guess I can do it the easy way, right? Dang, it's 3070 right now. Link must be moving, y'all. We need to get on these charts. All right, now that's enough to pay y'all debt. We're gonna have that we're gonna have 1.76 Link left over. I'm cool with that. I'll just add it back into the account when I'm done. But I want my debt to completely stabilize. And there it is. So I don't have to worry about my debt going up, down, left, to right. If Link is still bullish tonight, cool. I'm not gonna lose. I can go to sleep good tonight, right? But that's how we get out of our debt positions. I don't want you stuck in a debt position. You get out the same way you got in. Swap to something stable. We already went over deposit and borrow. I briefly talked about payback and withdraw, but because I don't use debt rate swap. I'm not even sure what this is. Swap your existing debt from variable rate to a stable rate. I use variable rate. I guess a stable rate will be a little higher, but it's gonna stay the same. I use variable rate because these numbers change, and sometimes I don't owe as much. I kind of like that. I kind of prefer it. Sometimes I earn more in a day than I do. It's not just stable, right? It's gonna vary. When you do the stable, and this for a debt swap, that's not for a collateral swap. Yeah, I like for mine to move around. It could be better one day than the next, so I use vary. But we did collateral swap. We just didn't do deposit and borrow. So we talked about depositing, and I showed you how to borrow already. Once you supply it, you can borrow any of these assets. And when you want to pay it back, I told you had to use the actual currency that you borrowed so that you can pay it back. I can't pay back my Bitcoin with USDC, right? I had to come over here. I can only pay back my Bitcoin with Bitcoin. And since I don't have any, I would have to trade so that I can have the currency that I need and swap into, right? If I want to pay off my Bitcoin, I don't have any. I'm going to swap my DAI into Bitcoin. Now I have enough to pay it back, but I cannot just use my DAI to pay Bitcoin. I had to swap it into Bitcoin. Once I make that swap, I can come to payback. Oh, I don't have any Bitcoin debt. My bad. That was collateral. That's why. But anywho, I can pay it back here. I got some USDC debt, so I can use payback. I want to go ahead and give back all the money. I can use the whole amount, and I'm paying them back $100 off of my debt. Now, I know I'm famous for saying I don't pay debt. Understand that y'all heard me saying that when the market was extremely bearish. In a bull run, I do get rid of my debt. There's no reason not to. I want to stay far away from debt as possible, especially at times that we had those big pullbacks like we just did. I want to utilize debt when I can, but I don't want it when I don't need it. So I deleverage a lot, right? I only leverage when I absolutely need leverage. If I want to enter into a short position or if I want to add more to my collateral, then I leverage. But when I finish with my play, I normally deleverage and just keep the change. But I don't like to hold on to debt in a bull run. I want to be in case the market does what it's doing right now. My account is somewhat frozen. I've been able to touch it, move money. I was even able to take money out today, but I can't change everything, right? But at least I'm safe because I don't have much debt in that account. I'm not worried about it blowing. I go to sleep good at night. So try not to have an over leveraged account and you'll be all right. Any questions on strategies before I do my last thoughts? See, when you don't have no questions, it means you just know everything I just said. You can do it right now with no problems at all tomorrow when you start practicing or tonight.
I got a question.
All right, you know what I'm gonna have to do, what they be doing. If you're confident about what you learned here tonight, push 1. If you're unsure about how to use what you learned tonight, press 2. Let me see y'all talking to chat. Steph, you've been with me for years. What you mean, too? Oh man, we're gonna have to do another class again. All right. So this is what we're gonna do. Maybe I didn't talk slow enough this time. I want y'all to just try to use what we practice. I'm gonna talk to you guys again. A lot of you one-on-one, and we're gonna go over it a little bit deeper if you have any questions. But yeah, what is stopping you? Can y'all think of what's holding you back? Like what's stopping you from understanding this right now? If it's yellow, that shows that you are borrowed against the asset, yes. And it's green, meaning that you're supplying it. Just being honest, and I'm taking notes. Okay, great. Well, yeah, like I told y'all guys, this isn't something that we get overnight. You'll get it with time. So maybe as we go, it'll make that much more sense. And I'll try to talk even slower in our next class. Y'all be sure to take questions down. If you think of a question later on, write it down and bring it to class or type it in the chat. I'll answer immediately. But I want to make sure that y'all are getting this. I just need to know what y'all not getting so I know how to fix it.
So I got a question.
Great.
All right, so this is all. I remember in the beginning you said you want to have multiple accounts or for whatever you're trying to do, right? So this is all in one account based off whatever you're going to use for whatever you decide to use, whether it's Poly, AVAX, whatever you decide to use for what you're going to go load, whatever you're going to use, right? This is just one account that you can do, that we just went over with all these different things you can do in it. So you would do this essentially with every account that you want to create your multiple. You get what I'm saying? Like, so every account you'll be able to do everything in the same. So every account, this applies not to just one account. This applies to every account that you create. I guess that's what I'm asking.
Okay. Yes, sir. All your same strategies and rules, everything would look the same. Only thing that changes is the network.
Okay. Okay.
If I take you over here to AVAX, it's gonna work the exact same. And now because I switched networks, I gotta switch my wallet to the network that I'm on. So I will come over here, or I can click this button, switch to AVAX. And now I'm on that network. And I'm able to trade it. And again, they have assets just like Arbitrum. Now, these two are my favorite. AVAX and Arbitrum because they have a lot of assets that you can trade in and out of. Polygon has the most, but it's got assets that I don't even plan to buy like Curve or Balancer. I don't plan on holding those at all, or even Euros. I'm definitely not buying on Euro. Euro been losing for the last, 5-7 years? I ain't holding on no Euro. So it got assets that I wouldn't use, but I like AVAX, Arbitrum, and Base. Base is high in fees when you want to do those operations. Any of these strategies cost like $30 to $50 using Base. Avalanche, everything I just showed you, you're going to be paying 30 cents to $3. Arbitrum, if the market is low in volume, you'll be paying $3 to $10 for every transaction. So have that in mind when you're creating these. Polygon, you're paying no more than 3 cents for a transaction. You just gotta hope that you're transacting at a time where the market isn't volatile. You're gonna learn to start paying attention to the GUI. This lets you know how fast the market is moving. And if you're gonna be like, this is gonna work with Solana, this is gonna work with BNB, this is gonna work with your Polygon. When the GUI is this low, then you could expect the market to move the way you want to, and that your transactions will go through with no problem. When the GUI is in double digits, that's when the market is moving so fast that Solana isn't going to work, Matic isn't going to work. You know what I'm saying? AVAX is going to charge you higher gas fees, but you want to pay attention to this GUI. So middle of the night, late at night, times like now when nobody is really on charts and trading is the best time to maneuver your private bank. When the market opens at 8:30 tomorrow morning, and New York session opens and the market start moving crazy and fast, that is not the best time to want to manipulate your bank account. So try to do this stuff overnight. Right? A flow chart or if then else logic or a tree for bullish market and bearish market. What was the question? Okay. Well, again, I'm gonna go ahead and finish with my last thoughts. If y'all don't have any other questions.
Is, you know, when you talk about the bullish, when the market is bullish, and then you talk about your moves related to when the market is bearish. I understand the concept of, say, for instance, if ETH is in a bullish trend, then there's a benefit there to borrowing against it when it's low, and when it moves up, only paying back what you borrow and keeping the rest when the market moves up. Then opposite, when you want to, when you know the market's going to be bearish and you want to get rid of debt or have to pay back a smaller amount. Say if you're sitting at $3,500, the market drops to $2,000, but $2,000 in terms of ETH. And then when you close out your trade, you get to keep the difference. I guess the difficulty that I run into is understanding the tabs in when you swapping collateral, debt swap, multi-swap. I kind of got that concept, just supplying the DApp,
Mm-hmm.
But then I hate to say it, I get to InstaDApp and I freeze up on if I'm making the right move. Because once you make that move, it's not like you can't go back and reverse it. But you at the same time, you don't want to spend a lot of gas in doing that. So that's where the trouble comes in, with just really understanding the particular strategy. Because when you say leveraging, I think of leveraging when we're trading on the exchanges. But here, leveraging, you still spot trading, but then I'm wondering, okay, well, where's the leveraging concept in connection with that?
Pulling money out of thin air.
Huh?
The fact that you're pulling money out of thin air. Like when I leverage, I'm able to use the assets that I have to take out a loan. And what leveraging is basically doing is taking out a loan and then resupplying it. Right? Like I got enough money here that I can take out a loan if I wanted to. Well, not in this account, I don't. But in the account that we was playing with, we have enough money that we could, let's see, did it go away? Yeah, it went away. But we had enough money in that account that we could have leveraged it. And that's what we was doing so we could create the money. That makes sense?
It's a little difficult to understand. I don't know about anybody else, but that's where I'm having, difficulty. I guess if you would have asked me, okay, if I wanted to supply, if I came into the InstaDApp with no monies whatsoever, I have money on my MetaMask wallet, and I want to supply one of the networks, be it Polygon, Avalanche, whichever one, what action would I take to supply it? Okay. And then once I've supplied it, then I need to look at the market to determine what direction I want to go in. Whether I'm going to, if it's a bullish trend, if I'm going to buy low, get in now and look, buy the dip, so to speak, and look for that bullish move to take place. And then pay back what I borrowed that ran up. So, but first I even have to understand, okay, where do I go to borrow? I mean, for example, I have $2,000-3,000 sitting in my InstaDApp, but it's just been sitting there collecting interest as USDT and USDC, but I don't have it in any. I haven't taken advantage of, the ups and downs in the market just for fear that I would make the wrong move within the tool, even in the simulated part.
Okay, so hold on. Now,
So
this
I
class,
don't know.
the one that I'm fixing to address, I'm gonna address your question, but I'm teaching that in our third class. And you're asking basically, how do you know when to look for it to go up or when to look for it to go down? You're asking the trading question. So with
Well,
that,
but I'm just saying, if a flow chart would say, okay, bullish market, then the if then else logic is, if it's this condition and you want to borrow collateral, or just not even if, it's what would you do based on the current stance of the market. This is
right.
where you
So
would want to utilize
let me give my response real quick, because I'm
Yeah,
not
go
going to
ahead.
be teaching. Yeah, I'm not going to be teaching on a flow chart. I got people here that is already having difficulties with tools, so I don't want to add a lot of tools to them. I will teach them how to chart, and I am giving my charts. So the way that I trade my account, I trade on a 4 hour. Yeah. Why am I? Whenever I think am I going to buy or am I going to discharge, it's always based on a 4 hour and moon cycles. So we knew we was going to discharge because when we was here on a 4 hour, we've been under the gator for a minute, right? All while we was bullish, when you're above the gator, this is collateral swap. And we keep it simple, y'all. I want to show you, because like we're spot trading. We don't have to deal with leverage. So we don't have to worry about, oh, the market pulled back by 5%. I think I blew my account. The market can pull back 10% over here and not affect you that much, right? So whenever we got this point, we call this gator out of water. We call this a golden twist. This is the areas you look for to say, all right, time to buy. You would have been buying while price holds above the gator. This whole time you hold it, no reason to get out. Around right here, when you got price coming to your 20-day and it's trading below your 20-day, you would have taken profit, right? When it found support and it started going above, you'd have thought to yourself, all right, let me go ahead and get back in. We trading above the 4 hour. I'm finna to hold. Yep, we bullish. We looking good. Uh-oh, the market is coming back on me. I'm starting to get a little nervous. All right, you know what? Let me go ahead and close. You get out. And what happens now? When you get this twist, this is a death cross. Now, again, on my class on 2 weeks from now, we're going to go over how to read a gator. I'm gonna give y'all my whole baby daddy mama scenario again. So now when this went under the gator here on the 4 hour, right? When we had this 20-day cross under our 55, that's when I'm thinking, all right, let me get my discharge on. Let me go ahead and push the button. I start discharging here. I don't plan to stop, right? It's going down. I'm in let me get this right. So I under the gator, I waited till it went under the gator. Around here, I realized we was bearish. Took my sell. Holding my sell, feeling like good profits, great. Everything is good. I'm not scared yet. It's just coming back. It's going to find resistance. I'm going to go ahead and keep holding my sell. Yeah, I knew it was going to drop. Uh-oh, it looked like it's coming back up. Is that above the 20-day? Close. But I still profited 3% on that. And now I'm thinking to myself, all right, it's looking like we bullish. Should I buy? Gator didn't never really go out of water, right? It never crossed, the 20-day never crossed above my 55. So I never entered a buy. I was just waiting to see, man, what's going to happen? I want to buy it. If it can just get above that level, I'm going to buy it. This candle came out of nowhere, bearish engulfing. That candle told me everything I needed to know. Then I got these 2 red marks. Y'all going to get these charts. Y'all going to see the same thing I see. This right here said, Dennis, you should be shorting the market. So I'm discharging. Got in that discharge. I'm holding. No reason to get out. We ain't break the 20-day. We still holding. Oh man, everything is looking beautiful. Consolidation. We still ain't tapped the 20-day. Holding. Consolidation. resistance at the 7. There's no reason to exit this trade yet. No reason to exit this trade yet. Even yet still, we still are under the gator, until price comes about up here. 2,600 start looking bullish. I would continue to discharge. Now, when it gets here, close off your discharge. Look at that, 20%. And y'all can back test this. Don't just take my words for it. Do some rewinding, go all the way back on your charts and think about how you would trade, right? And keeping it as simple as it really is. Gator is above the, price is above the gator. Final support, the yellow is above the red. You're bullish, and anytime the yellow is above the red, right? Price came here to your yellow, it found support. This would have been the area you to start thinking to yourself, let me add collateral. There's no reason to exit. No reason to exit. We still looking good. We just found support on the 20-day. We still looking beautiful. But right around over there, it went under your 20-day right there. Look at that. 24% gains on your bank account. And it happened in 8 days. 8 days, you gained 25% spot trading. So I don't want to go too deep into it. I'll teach it on in 2 Wednesdays from now, 2 Tuesdays from now when we go over charting. But what I would like to end a note on is that this is the safer way to trade. I wish a lot of you got experience of that 2020 and 2019 because we didn't have leverage. We couldn't use 20x, 50x, 100x leverage, and there wasn't that many people blowing accounts. I think leverage and meme coins is used to keep people from real wealth. It's distracting them. They're not buying Bitcoin, but you can, right? And you can keep stacking it. You're buying Bitcoin, you're buying ETH, you're buying Solana, and you're borrowing against it. But the best thing about everything you're doing is you're spot trading. Because you're spot trading, you're not getting taken out of the game when they have pullbacks. Again, how many people y'all think is getting liquidated every day right now in the summer? This market has been choppy. It'll go up real strong, take the sellers out, and it'll drop real fast and take the buyers out, and then every retail investor then lost. Start asking your friends, how is your trading been going? It's the same for us all. Don't feel bad if if you are a trader and it's been a little rough for you this summer. It's these 2 months, August and September. We call it September Rectember just because that's the type of vibe we get from it. These is hard, y'all. So when we're going through these hard months, the smart thing for you to do is preserve. To preserve, you want to use less leverage. Don't go out there using 20. I'm not even using 20x anymore. When I trade, the most I'm going to use is 10x. I'm back to using 5x now because the market is moving that fast and that drastic. And what's even safer is no leverage, right? When the market did that hard pullback the other day, I had made some money, then I tried to buy the dip and I had lost some money. But inside of my collateral account, my InstaDap account, I'm just going to continue to add. Every day I win a trade, even though the market is going down, I'm going to continue to add. If I make $500, $300 a day, I'm gonna move that on over there and I'm gonna add $100, $200 to that, right? We should have some type of disposable income so that you can continue to add to your accounts. This account isn't going to be able to trade itself until you get it to at least 5 figures. Once you have, we call that a standard account. When you have $10,000, you have a standard account. At that level, you actually don't even need leverage. Whenever you're bullish on ETH, and you got $10,000 in your collateral account, in your DeFi account, you can buy a whole ETH. Why do you need to use $300 and 10x leverage? You feel me? You can afford a whole one. You know what I mean? You can afford a whole Solana inside your other account. You can afford a whole link, 10, 20 links. But me, when I trade, I buy things at $1,000 at a time when I'm spot trading. When I short, when I'm discharging debt, I'm discharging $1,000 at a time. These are spot trades. And if I'm getting 5% per trade, that's $50 a trade. And that don't seem like a lot of money. I get it, but it adds up. It's compounded. This is what I'm leaving you with daily. Why isn't it pull up? That's it, though. This was what I want to leave you guys with, and I hope y'all enjoy your night understanding what I'm trying to share with you guys. We're going to just do $1,000. $1,000. You're only going to earn 1% because you're trading spot. You're not looking for big plays. You trading 1% a day. What if y'all did this for 2 years? That's the bull run, right? By 2026, we're gonna be chilling. But for the next, 2 years, you can get you 1% out of the market inside of your Instadap account. 1% a day. That's all I'm asking you to do. Oh, I don't know if y'all can read the number. Y'all want me to read out loud? I'll read out loud. That says $1,427,587.91. That's what getting 1% a day, every day, 5 days a week for the next 2 years. Y'all, it's possible. It's possible. But you have the opportunity to swap your collateral every day if you wanted to, get 1% out of the market, and then swap it back stable. All right, y'all. I'm gonna get y'all back y'all night. Any last minute questions, comments, or concerns before y'all go to bed tonight?
Man, that last thing, I don't know. I hope we talk about that a little bit more, because that'd be interesting there, just to get in. I think to do the 1% and get out, I think that's doable. You ain't gotta wait that long. Once you get to 1%, close it out. I believe in to get on out and then wait for the next trade the next day.
And actually, I don't do 1% because I don't use 100% of my account. But if you use half your account, all you need is 2%.
Yeah.
A lot easier trading 5,000 than 10,000. So I go that way. I just put $1,000 into all the assets. I put 1,000 in Bitcoin, ETH. If it's a bullish day and I put 1,000 into everything in the mornings, by that evening, it's a good chance I'm in profit more than 1% on all that, right? So now I can close it this evening and call it a day. Hey, I'm up. I made my 2% today. And I'm gonna do it tomorrow too. I'm gonna wake up if the market's still bullish. So y'all also got the mastermind report. If you didn't, go download it. The mastermind report is telling you what days are supposed to be bullish, what days are supposed to be bearish. Use that to your advantage and get that 1% out the market. But like you said, my brother, we will go deeper in that on the next call. All right, well, I held y'all long enough, man. I appreciate y'all and y'all energy. We're going to get more clarity on this as the time go by. And if you don't, we're going to talk about it and we're going to get the problems fixed. Y'all don't feel scared. There's a lot to take in, but we're going to get it all understood. Peace, love, and abundance. I'll catch you all on the next call.
All right, my brother.
Hey, thank you.